Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Coming up, Nigeria's inflation rises to 15.75% year-on-year in December. IMF says growth in Central African Economic and Monetary Community is expected to rebound to 2.7% this year. Gambia and Switzerland signed cooperation agreements on civil aviation and migration. We'll begin the show with fresh data from the National Bureau of Statistics showing Nigeria's inflation rose to 15.75% year-on-year in December 2020 from 14.89% recorded the previous month. The figure, which is at its highest level in 3 years, beat the expectations of analysts at the financial derivatives company who had projected an increase to 15.4%, largely driven by forex rationing, output and productivity constraints, higher logistics and distribution costs. According to the NBS, increase in food prices pushed food inflation higher by 19.56%, while core inflation inched up by 0.32% to 11.37% in December. Similarly, urban inflation rose by 16.33% year-on-year, while rural inflation rates stood at 15.20% in December. Bauchi State maintained its steady rise from November to become the state with the highest inflation rate at 19.85%, while Abia State recorded the slowest rise in headline inflation. Okay, let's get some market numbers now. On major stock markets we track in Africa were mixed at intraday. The NSE index sustained its bull run and was up 0.19% as at midday, while the JSE index in South Africa declined 0.08%. The EGX 30 in Egypt is closed for the week, but positive on Thursday, while Kenya ended Thursday's session positive. And markets in the Middle East closed for the week mostly negative on Thursday. In the UAE, Dubai's main index shaved off 0.70%, while Abu Dhabi's index lost 0.45%. Elsewhere in the region, Saudi Arabia's benchmark index declined 0.18%. Only the Qatari index closed for the week positive by 0.43%. And in Europe, markets traded in negative territory on Friday as a re-emergence of COVID-19 cases in China pulled back the positive sentiment generated by U.S. President-elect Joe Biden's $1.9 trillion stimulus plan. Well, let's talk to Conrad now. Hello, Conrad. Good afternoon. It's a Friday, so...
Good afternoon, Timmy. Yes.
And thank God it's Friday.
Thank God it's Friday.
Yeah. Okay, U.S. President-elect Joe Biden has unveiled a $1.9 trillion stimulus plan. Now, he calls it the American Rescue Plan. That's a lot of money, but stock markets in Europe are not inspired by this. Why? What are investors afraid of?
Well, Jimmy, as you said, this is a lot of money, $1.9 trillion US dollars. That's 1,900 billion US dollars. Such a huge amount for a rescue plan. That means that the problems of the economy in the United States are really huge as well. And of course, there are many concerns, many discussions on the markets whether it will all work. Given the division, the disunity of the American society, of course, one has to ask whether this will really manage to help America to get its act together, whether it will have a unifying effect, whether it will, bring the economy in shape again. Of course, what also some people, in particular on Wall Street, are afraid of is higher taxes. Eventually, somebody will have to pay for all this. But as higher taxes as lower taxes in recent years have been such an important driver for the stock market, of course, now people on the trading floors are wondering what happens when higher taxes are coming. And last but not least, all this depends very much on COVID-19 and on how the United States manages to deal with the pandemic. Only if, Corona is in check, only if the risk is reduced, the American economy really has the opportunity to return to growth.
Now, what about the COVID situation in Germany or Western Europe in general? Are the vaccinations on the way? Can businesses be hopeful again?
Well, Jimmy, the vaccination processes have started, but I have to say they have started quite wobbly. Also here in Germany, there weren't enough vaccination kits at first, and now it's going more slowly than many people had hoped for. What's also going more slowly is state help. Businesses are reporting that the huge amount of rescue money that the government had promised is not being distributed as quickly as the businesses had hoped for. Some payments were delayed, communication was bad, businesses didn't really manage to find out why the delays happened. And then there was also a dispute between the German government and the European Union Commission, which resulted in the German government to take back parts of its original promises, which of course also caused a bit or a lot of disappointment among businesses. All this, of course, is making people wonder here on the trading floors whether, yes, the vaccines are happening, but whether eventually this will be a bit too late for some businesses.
All right, let's look at some corporate news out there. Germany's Siemens Energy is being sued by its U.S. competitor, General Electric, which alleges Siemens Energy used stolen trade secrets to rig contract bids. That's a very serious accusation. How are investors reacting to this?
Very negatively, Jimmy. The share price of Siemens Energy is notably under pressure here today in Frankfurt. You know, Siemens and General Electric have a bit of a history of accusing each other for stealing intellectual property. This case is not, the usual affair, because in this case, Siemens Energy itself has issued a statement that says yes, something happened in 2019 which wasn't kosher. Information was exchanged between an employee of Siemens Energy and a customer during, the process of a bidding for a contract. This at the time did not please the compliance department of Siemens Energy, and as a consequence, the employee was sacked. If the accusations that came about today by General Electric, we don't know really what the details of the claim are, but if they are connected to this case in 2019, it sounds like General Electric really might have some merit with its case, and that of course means a lot of bad press for Siemens Energy, a lot of cost, a lot of damage.
Conrad, it's always a pleasure talking to you. It's been a great week with you. So thank God it's Friday. Enjoy the rest of the weekend. Be safe and be well.
Thank you.
And the UK economy is heading for a double-dip recession after official figures confirmed a renewed slump in November as the second wave of the coronavirus pandemic took hold. Let's see how the markets are chewing the numbers this intraday, and Juliana is on board. Hello, Juliana. Good afternoon. So, how are the markets reading this latest GDP figures?
Not great. The FTSE All Share is in negative territory at intraday, and that's because, of course, there are no surprises that GDP took a downward turn in the month of November, falling by 2.6%. This ends 6 consecutive months of growth. Economists, observers, they actually priced in something a little bit different. They thought it could fall as much as 4.6%. Services, they took more of that downward drag. Services fell by 3.6%. And even though, unlike during the first lockdown in the spring when construction was closed, construction really kind of pushed the GDP up because it was open. It was up by 1.7% and manufacturing was up by 0.7%. As you said, it does appear as if the UK is heading for a double-dip recession. Earlier this week, the Bank of England Governor Andrew Bailey kind of priced it in at about a 1.6% contraction in the fourth golden quarter. So having a look at the numbers then, the FTSE All Share is down by 0.72%, the FTSE 100 down by the same rate, the FTSE 250, the domestic market, that's down by 0.92%. In current currencies, the pound is down on the US dollar by 0.21%, down on the euro by 0.09%, and down on the Japanese yen at intraday by 0.40%.
And for Chancellor Rishi Sunak, things will get harder before they get better. How optimistic are businesses? What are you hearing from them?
Businesses very beleaguered here in the UK. They're not very positive. At the moment, Britain has spent over £250 billion trying to buff up businesses and to keep the economy ticking over. The most important scheme for some has been the Furlough Scheme. So the government have basically been paying for people to stay at home. That's already cost the British taxpayer £46 billion. As soon as we went into this third national lockdown at the beginning of this month, the Chancellor did pledge to give grants of up to £4.6 billion. And earlier this week, he said he wouldn't be doing anything more until the March spring budget. But some say that's just too far away, that businesses just cannot survive until then. And because the lion's share of the issues are really falling on retail, hospitality and leisure, there are some businesses that are missing out. So there have been so many calls. The British Business Chamber of Commerce have written an open letter. The Federation of Small Businesses have written to the Chancellor. So perhaps because of these pretty poor GDP figures, we could be getting an update as soon as next week from the Chancellor Rishi Sunak.
So, looking at the events of this week, aside from the update from Rishi Sunak, what else should we expect next week, even though I know you don't have a crystal ball there?
I don't have a crystal ball, but luckily enough, I've got an economic calendar that I'm able to look at. And there are two big days, really. Next week, Wednesday, we're going to be looking at inflation. Now, inflation in December was at in November, it was at 0.3%, way below the Bank of England's target of 2%. There are some that are expecting it to dip to about 0.1%. Will this perhaps push the Bank of England to push interest rates into a negative territory? Potentially. So all eyes will be on that. And then most importantly, we're going to be getting the flash PMI data on Friday. This is going to be really, really crucial, especially for the service sector. In November, PMI for services was at 49.4, much lower than it should have been, considering 50 is that threshold of contraction. Some are putting it down at 38.4. And if it is that low, that means the double dip recession could be much worse than people feared. And of course, most importantly, it's going to be COVID, isn't it? We're going to be looking at those COVID data. Still, the rates are at record high. Lots of people still not following the rules here in Britain. We spoke about the new variant that's going around the world that came from Kent. Now, there's another variant lots of people are really fearful about, which is a new variant that's coming in from Brazil. So yes, so much is going on. It is only January, but 2021 already feels like a very long month to me.
It's going to be well.
Yeah.
Data, data, data. You and I have a lot of work to do. So we keep an eye on those data. Enjoy the rest of the weekend. And the Ghanaian President Nana Akufo-Addo has reiterated the country's preparedness to lead in the implementation of the African Continental Free Trade Area Agreement. And it says policies introduced by the government over the past 4 years positioned Ghana to play this role. Following the takeoff of AFCFTA on January the 1st, Ghana's Ministry of Trade and Industry, in collaboration with the Customs Division of the Ghana Revenue Authority, held a forum to focus on the implementation arrangement of the commencement of trading under the AFCFTA. All right, let's talk to Alabi John Kennedy, the managing partner at Bespoke Business Consulting in Accra, Ghana. Thank you very much, John Kennedy, for joining us again on the show. Thank you.
Thank you for having me. Good afternoon to your viewers.
Yeah, first of all, Ghana has commemorated its first export under the AFCFTA framework. How much do you know about this development?
Well, Ghana has been in the forefront of the AFCFTA program and agreement, and they've tried as much as possible to make sure they are well positioned to start the trade. We could notice that on the 4th of January 2021, Ghana did their first trade by Kasapoko, Ghana Limited, and the Gandor Cosmetics. And that was the first trade that was done on the AFCFTA platform. And basically, they are strong enough to make sure that the procedures are working properly and they are in a better place to achieve their aims based on the agreement.
You were at this forum held by the president and the customs officials on this AFCFTA implementation. What were the major areas discussed at this forum?
Okay, basically the major area that we discussed was mainly about the coordinating office. This is an office set up by the presidency and the Ministry of Trade and Industry to make sure that we are able to educate businesses and give further information to people who are interested in taking advantage of the AFCFTA agreements. And basically that's what the coordinating office is supposed to do. The president also puts together a steering committee, and the steering committee is supposed to set up their own committee to make sure that they're able to get a work in place. Now, the work is supposed to give a detailed guidance on how businesses can take advantage of the AFCFTA agreement. They also spoke about how the customs are well prepared and well trained to advise clients who want to do the trade and understand how the tariffs and documentation works. Because right now they're supposed to trade on the platform of the AFCFTA. So basically they are well trained to get that done as well.
Now, while speaking at that forum, the president said the government has instituted a national export development strategy to take full advantage of this deal. So what are these strategies and how is it supposed to help to harness the opportunities, brought by the AFCFTA?
So basically the strategy has a 10-point agenda and it's under the Ministry of Industry and Trade. What they seek to achieve is to make sure that they are able to export traditional Ghanaian goods. There are certain policies in place right now by the current government. We are looking at one district, one factory. Now, whatever the factory will produce is supposed to provide its services to the product, the Ghanaian citizens, and export abroad. We also have planting for food and jobs. So what this will be is that there will be more planting for food and jobs that will also cater for the Ghanaian citizenry and export abroad as well. So these are mainly to be able to promote the Ghanaian goods itself and export to the country so that we can have more trade facilitation between the African continent.
Well, Ghana may have, started off being the first African country to launch into this deal. But watching from where you are, looking at other African countries that have signed into this deal, well, particularly Nigeria, what do you think? Do you see success of this deal?
There's a huge potential. There's a huge potential that we're looking at based on this agreement. What each country needs to do is to make sure they try as much as possible to train maybe the custom services in Nigeria, to be particular, and to be able to industrialize each of their economies. When this is done, there will be facilitation of trade between these economies. What we need to understand is if we don't produce what we need as Africans, we can't actually sell to each other. Most of the time, we import from African countries in the US and rather sell to African countries. What they need to do now is to put strategy in place, to set up business, factories that will produce all traditional each other. When I mean each other, to other African countries. This will help to boost our own economy and help us to stay independent as a whole as attitude. So basically, it's of great potential, and the private institutions also should be able to take advantage of this. When the government put this strategy in place, they should partner with the private organizations to make sure that they also harness this opportunity. Now, the big businesses and the big companies would want to rush and get into this. However, they should also give leeway. They should not compete too much with the small business so that the small business can also take advantage of this and help the economy to grow. So basically, it's of a big blessing to Africa if we're able to implement all these agreements and strategies properly.
All right, thank you very much, John Kennedy. Always a pleasure talking to you, and we appreciate your time always on the show.
Thank you.
And the International Monetary Fund expects growth in the Central African Economic and Monetary Community to rebound to 2.7% in 2021 and continue to pick up gradually to around 3.75% in the medium term, as reforms to improve governance and the business climate are assumed to slowly take hold. According to the IMF, balanced fiscal consolidation efforts will increase non-oil revenues and contain expenditure, while reserves are projected to be rebuilt at a slower pace than previously envisaged, but should reach the equivalent of 5 months of imports by 2025. Inflation is projected to stay at around 2.5% over the medium term, below the regional convergence criterion, as monetary policy would remain appropriately tight. However, the IMF notes that the outlook is highly uncertain and contingent on the evolution of the pandemic and its impact on oil prices. And Switzerland and Gambia have signed 2 cooperation agreements on civil aviation and on migration during the official visit to Bern by a delegation from the Republic of the Gambia. The agreement, which opens up new opportunities for cooperation between both countries in the field of migration, allows Switzerland and the Gambia to strengthen their respective efforts in fighting illegal migration. The agreement covers issues relating to the practical organization of returnees, such as identification and the issuing of replacement documents. Switzerland has so far concluded 8 similar migration cooperation agreements with countries on the African continent, among them Angola, Cameroon, Benin, and Tunisia. And with that, we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimezie Obi.